What is up, guys? It's Tyler from Bullseye Investing here. In today's video, we're going to talk about why I believe Tesla's hugely overvalued, what I'm going to do with that information, and tips on what you should do depending on the situation you're in right now. I believe Tesla has had a nice run, but I believe it's way overvalued right now. So without further ado, let's just jump straight into it. With Tesla about to being introduced into the S&P 500, the stock has been soaring lately, okay? Look at this. Late October to this. We're in December now, and it has gone from a mere $388 a share to almost $700 a share, when we thought in October it was already super high, right? But we have to realize something. Being introduced into the S&P 500 as the main motivation for Tesla's stock boost has no influence over the actual intrinsic value of the company, right? Rather, the gains of institutions and people who have to buy into the S&P 500, which pushes up the price, and people buying into Tesla stock, thinking that when institutions do buy into Tesla stock, the stock will go up, and it just creates that effect, right? Pushing Tesla higher and higher. But before we get into more reasons on why Tesla stock is overvalued, I know what you're thinking right now. Tyler, do you know how much money Tesla short sellers lost this year? In fact, more than the US airline industry, right? And don't worry, okay? I don't plan to be part of those people who bet that Tesla stock will go down, the Tesla shorts, if you will. And I dare not compete with Robinhood traders continuing to buy and buy and buy, okay? Like Jim Cramer said, we got Robinhood as a massive group of individual investors who've become in many ways a more powerful collective force. And I will not fight them, okay? They love Tesla stock, and they'll keep buying it and buying it and buying it, I bet. So even if it's overvalued, Jim Cramer says they don't look at the same metrics, right? They don't care. They just know Tesla. They're gonna buy it. Okay, so I dare not compete against that. And let's look at this interesting trend, right? This is the users holding and the price of Tesla. As Robinhood users increase their positions in Tesla, more and more users are holding Tesla. The price is going up. That's a really sharp correlation. When I would argue that as the price goes up and up and up, the number of users should actually go down if they were thinking more logically, right? But of course, this is natural for Robinhood, and it just this sharp correlation is a little bit uncanny, don't you think? But now let's go back, okay? So I know you're thinking, Tyler, in this video you said Tesla was the second best stock to buy. What happened then? Well, I made this video about a month ago when Tesla was not $800 a share. And I also gave a major reason being that Tesla is being introduced into the S&P 500, which could push the stock price up even farther, right? Turns out that did happen. And that's where we are today. But now I believe that Tesla stock is overvalued, okay? So now we're going into all the reasons why I believe Tesla stock is overvalued and can't live up to its valuation. So Elon Musk actually said that the stock is too high a long time ago, but they didn't listen to me. He said this quote early this year in December 2020, okay? Now, I have no doubt in my mind that with the Biden administration, that will be great for EV stocks, right? And EV sales will go only up and up and up. But if it's already valued in to a certain degree, even valued in more so, then Tesla simply can't live up to its valuation, right? So that's what we're going to talk about in this video. And I bring up three main concerns, okay? Tesla's competition in the future. Quality issues with Tesla. This one should be taken with a grain of salt because I know a lot of you guys and a lot of Tesla owners actually love their Tesla, but there's some customer service / quality issues we need to address, and a drop in demand with Tesla, okay? So let's look at the Ford market share over time in percentage. From 1961, they had almost a 30% market share. Now they have about a 14% market share. Now, why does this pertain to Tesla at all? It's just Ford, right? Well, we have to realize Ford was one of the front runners in terms of making a consumer car for the masses, and they had a huge market share. But then over time, as more competitors get into the market, then their market share drops. And this is where it ends around 2016, 2017. But I'm sure it would be a little bit lower in 2020, right? So we need to look. Tesla is up here now, right? He has a big market share. It's one of the front runners in EVs. But now it's going to keep going down over time as more competitors get introduced into the EV market. Just something interesting to look at. Now let's look at some competitors. General Motors pledged to invest billions into electric vehicle production, and it plans to have 30 models by 2025. This is definitely going to compete with Tesla, at least in the long run, right? So if we're thinking that Tesla is going to have the same market share as it does today, that simply can't be. Fisker is another one. I know that they're a late comer to the game, but in the future they could also pose a challenge. Neo, Xpeng, Li, they're Chinese companies right now, but if they decide they want to expand their market share in America and really, really expand it, they can also be direct competitors with Tesla. And we can't forget the existing car companies that aren't just for electric, don't manufacture just electric cars now, but they definitely can in the future, and they are right now. So they might not, they'll be considered gas car companies now, but as they make the transition to electric, they'll be competing with Tesla more directly and more directly. So these are just some companies as well as these. Just ignore the Tesla at the bottom, but these are the main some electric vehicle companies. Okay, so those are some competitors. Now we move on to quality issues. Now, as I said in the beginning, many people like their Teslas. I know stories of people who bought Teslas, liked the Tesla so much, they went out and bought Tesla stock just because they thought that it was such a good product. Okay, so take this one with a grain of salt, but they do have kind of a bad rap sheet in terms of quality. In fact, JD Power ranked their initial quality as the lowest of 32 brands this year, thanks to some build quality issues reported by owners. Okay, so Tesla clearly doesn't have the track record that they would necessarily want. There's also some customer support. Nicholas Taleb kind of slammed the customer report and said that's even worse than he claimed last time. It's an insult to their customers. Of course, Elon Musk replied and said, "Saw this today. Tesla refunds in general should be easily." So of course they're addressing the issues brought up, but still kind of a bad rap sheet. And then there's also been reports that the electric vehicle knowingly made cars with faulty battery packs. Another X on the history of Tesla, right? Of course, moving into the future, they can improve this, and quality issues aren't too big of a deal, as I said before, but just keep this one in the back of your brain as a reason that people might not want to buy Teslas. But then here's a little bit more of an important one. There's a drop in demand in Tesla, okay? Now this is linked to the competition one, of course, but let's just take a look at this one, okay? So Tesla's Western European share of the electric car market has fallen from 34% in Q3 2019 to 14% in Q3 2020. Okay, so clearly in this sector of the world, not US, just this sector of the world, their electric car market share has fallen, okay? But in the US, they're holding up strong. Demand has stayed high and they're doing well in the United States, but this could change. This could mirror Western Europe as more and more car competitors go into the market, right? Existing gas companies making more and more electric cars, just competing directly with Tesla, right? And thus, I say that Tesla sadly can't live up to the expectations of their huge market share right now. Now let's look at some more reasons, and I think JP Morgan Chase says it very nicely that they don't believe Tesla will grow to approximately 2 times the combined size of Toyota and Volkswagen at the same margin, right? And this is what I think too. Tesla has growth ahead of him, but they're not going to grow so much as to validate their market share right now, guys. Let's look at some more metrics. So JP Morgan has a $90 per share target price on Tesla right now, $90. Now that just seems unheard of, don't you think? With Tesla trading near $800, $700 a share, $90 a share. So of course they're a little bit more pessimistic than I am, but they're very pessimistic. Okay. Now let's look at some Tesla PE ratios. 2020 estimates for the end of this year is that they'll have a PE ratio of 681.37. Now of course they expect that this will decrease to 251.81 and 157.24 as the market expands. They're making more earnings, right? But these are still really high price per earnings ratio that we need to keep in our back of our brain. But I just want to compare them later on in this video to other car companies and some other even outside of car companies. So let's just look at this. This is Tesla, Toyota Motor, General Motors, and I'm gonna butcher this name, Bayershi Motorin. Okay, just forget this lime. I'll just call it lime. Okay, look at this lime color one. 12.51, 12.90, 33.05, 781.06 PE ratio. Okay, so clearly investors are very optimistic on Tesla's growth for the future, right? And then let's go down to price per sales ratio. We have 13.91 for Tesla, 0.744, 0.427, and 0.419. So we can clearly see the difference between the price per sales ratio, right? But of course, these numbers are a little bit outdated. So let's go to some fresh metrics when we examine the bullish argument for Tesla, right? There's a reason that Tesla's up this high, and there's a reason I was bullish on Tesla for many years, but not so much anymore. And the first main reason I come up when someone brings up all of these metrics about comparing the price per earnings ratio for Tesla compared to other car companies, the main argument is that, well, it's hard to evaluate Tesla's worth. It's hard to evaluate Tesla because they're not a car company, so you can't compare them to other car companies. It's really hard to evaluate Tesla. Now, that's the main reason. Now, my logic for this, okay, is that let's look at 2020. This is their automotive business. This is their services and other business, and this is their energy and storage business. Okay, so clearly right now, Tesla's an automotive company, but they think in the future that could turn to more energy, more other services, right? Now that's the argument for Tesla, but and these sectors will continue growing, right? But we need to realize something. Tesla's P to S ratio is about 5 times greater than Amazon's, right? Because you bring up that Tesla's a tech company, an energy company, a battery company, a transportation company, and an insurance company. But ultimately, those are a lot of sectors, and they will continue growing, of course. But Amazon also has a lot of conglomerates, right? They own Zoox. They're going into self-driving cars. They have a lot of other conglomerates that are gonna keep growing and growing and growing. Then what validates Tesla's PS ratio to be 5 times greater than Amazon's, right? Especially because they're both competing for self-driving, right? So we just have to look at this, and Tesla's gonna grow, okay? But I think there's over optimism from Robinhood traders, and that's pushing up the stocks because they're not actually looking at these metrics a lot of the time. They're just buying, buying, buying. And now we have to go to the plan, okay? So I'm pretty sure that a lot of us know that it's overvalued. I don't think that's necessarily the unpopular position here. Maybe the unpopular decision that I'm going to do is not buy Tesla shares right now. And maybe tell you guys if it's a huge part of your position to sell off, take profits. Because I know a lot of people, they have huge profits in Tesla, right? There's Teslaonaires, right? But they're not selling yet. And I think that it's smart to sell at least some of your shares off. Okay, now here's why. If you're already invested, okay, let's say that for a lot of investors, they had maybe 10% of their portfolio in Tesla, and now it's grown and grown and grown to maybe 50% of their portfolios now. I say take profits, okay, maybe bring it down to 25% of your portfolio. I feel like it's too risky. Now, Tesla stock might keep going up and up and up, but we have to realize that because it's already overvalued, that's not because its intrinsic valuation is going up, that's just because people are buying it out of hype, and I believe that's too much risk, and it's a very speculative play, right? Now, if you're not already invested into Tesla, I say don't buy it. Also, don't bet on its drop, okay? Don't buy puts, but seriously, don't invest in Tesla right now. I could be wrong on this, actually, because it could keep going up and up. But as I said, it's a very speculative play, and we don't want to go into that right now, okay? So some final thoughts. I know a lot of you guys like Tesla. I know a lot of you guys like Tesla stock. I know that you guys might be investing in Tesla heavily, like I know a lot of people are, but just be wary, okay? Ultimately, this video comes to just be wary because Tesla stock is extremely overvalued. There's a lot of a lot of things pointing to the fact that they can't live up to their expectations with competition and all that, okay? Their JP Morgan has a price target of $90. I know there's Goldman Sachs at $780, but seriously, with those two extremes, a lot of people are bearish, a lot of people are bullish. There's two sides of the table. Ultimately, I say just be very cautious with Tesla stock, okay? Thanks for watching. Please subscribe. I try to post videos very often. Please hit the like button, and I'd like to hear your thoughts about this in the comments because I know this might be a little bit of an unpopular stance. Thanks for watching.